Hey everyone, welcome back to my channel, Physician, Finances, and Investing. I'm Joe, a resident physician, and you know what time it is. Let's talk about how to get that bread. Hey everyone, and welcome back to my channel. In my last video, we spent some time talking about the 5 things that I think absolutely every investor needs to know before they consider opening a Roth IRA. In case you missed that video, I'll put the link to it right up here. In today's video, I'm going to talk about the 7 things that I personally believe everybody needs to know before they consider investing one dime in the stock market. This is going to be Investing 101. But before we get started with today's video, I just want to take a moment to tell you guys a little bit about my background for those of you who may be new to this channel. As you know, I'm currently a resident physician. And unfortunately, on my path to become a physician, I incurred quite a bit of student loan debt.
I'm in debt up to my eyeballs.
As medical students, residents, and fellows, we spend countless hours of our lives learning medicine, learning how to be physicians, learning how to save lives. But on our journey to become physicians, nobody ever teaches us how to manage the debt that we obtain on that journey. In recent years, we have seen a massive increase in the number of physician suicides in our country. And as such, we've recently seen a paradigm shift where more emphasis is being placed upon physician wellness. But despite the new emphasis on physician wellness, I still believe that financial education and financial wellness is an area lacking in our profession. And I get it. Money and finances can be a taboo subject, and something that most people don't feel comfortable talking about with their colleagues. So that's why I decided to start this channel. I'm hoping to do away with the taboo nature that has surrounded financial education and financial well-being for so long, and to encourage you guys, my colleagues, to take a more active role whenever it comes to managing your finances. Alright, Doc. That's real touching, but can we move on, please? Man, who invited that guy? Alright, Average Joe, without further ado, let's get started. The first thing that you need to know whenever you're just getting started with investing is that you want to start now and you want to start small. Now, regarding starting small, we'll get to that in a moment. But regarding starting now, honestly, what are you waiting for? I don't care if you know what a mutual fund is. I don't care if you know what an ETF is. But I promise you that we'll talk about those in more details in a future video. Getting started now is how you learn. It's okay to not know everything about investing whenever you're first getting started. Honestly, there are so many platforms available nowadays that you don't have to have a ton of money whenever you're first getting started. And honestly, for a reason that we'll talk about in a few moments, that's probably for the best. Like everything else in life, there's no other way to learn how to invest than by getting experience and getting started.
Just do it!
Now, the second reason for getting started now is something that I know that all of you guys have heard of before, and that's compound interest. Now, I'm not going to spend a lot of time on this point, but it is something that I think is worth mentioning. Anecdotally, I have seen so many of my friends get frustrated in the past whenever they're first getting started with investing because of how slowly they see their accounts increase in value. And for some of them, they stopped investing for that very reason. Now, this is where compound interest comes into play. Basically, compounding interest is the idea that the longer that you have your money working for you, the faster you're going to see your account value exponentially grow as you continue to invest more money into your account and also reinvest the earnings that you make on your initial investments. So do yourself a favor and get started now.
No! What are you waiting for? Do it! Just do it!
Let's move on to point number 3. Investing is not gambling unless... Now, this is something that I hear from people all the time, my wife included. Now, whenever I hear this from people, it's usually because they don't understand how the stock market works, and they don't understand compound interest. Man, what did he just say? Somebody's gonna be sleeping on the couch tonight. Is it gambling? No. It's not if you have a long-term perspective, did your research, and understand the fundamentals of the company or other investment before you put your money in it. It's when you see people with a short-term mindset try to make a quick profit on something that they don't truly understand. Cryptocurrencies like Bitcoin come to mind a couple years back when people were flooding money into these investments without truly understanding blockchain technology. They were just getting the fear of missing out on a quick profit because they were seeing countless other people saying that they made millions of dollars in Bitcoin. They never truly understood the investment, and we all know how that ended up. The point is that investing is not gambling as long as you did your research and you understand what you're getting yourself into. Alright, let's move on to the fourth point. Inflation is real. Now, I know that most of you who are watching this video are a younger demographic, and whenever you hear the term inflation, you think of your grandparents, you think of the price of gasoline, the price of milk, the stories about how back in my day you could buy a loaf of bread for a nickel. But what inflation really is purchasing power. It's the idea that, is what your dollar worth today still going to be worth the same amount 5 years from now, 10 years from now, 30 years into the future? I'm sorry to tell you, but unfortunately, inflation is real. As a real life example, I know that we've all heard of McDonald's and we've all heard of their dollar menu. And in the past, you actually used to be able to buy something off of that menu for $1. You can't do that anymore. And that, my friends, is inflation. And this is where inflation affects you. Now, maybe you're not a fan of McDonald's, but there are plenty of other areas where inflation impacts your life, and it's one of the reasons why you need to make sure that you're investing. So let's move on to the fifth reason for why you're investing. It's how the rich get richer. Let's face it, if you want to build wealth or have any hope of obtaining financial freedom and retiring early, you have to get started investing. Now, are the super rich in our society investing in things like mutual funds and ETFs like most of us? Probably not. I'm sure that they're holding at least a percentage of their wealth in these more conservative investment options, but they're also putting their money in things with potentially higher risk and reward. Now, the entire point of this is that building wealth is not something that's going to happen overnight. It takes time. So that's why we have to take advantage of the investment options that we have available to us, as well as the time and compound interest that are on our side. You have to open the account, put some money in, and get started with investing so that you can learn through trial and error. You have to get started.
So just do it! Make your dreams come true! Just do it!
So moving on to point number 6. I wouldn't say that this is the most important point, but it's definitely something that can derail a lot of people whenever they're first getting started. And that point is that it's inevitable that at some point you're going to lose money. Now, I hate to be the bearer of bad news, guys, but unfortunately, at some point, if you have your money invested in the stock market, there's going to come a point where you're going to be down in your account. For people like me who just got started investing over the past few years, we didn't have the experience of going through bear markets like the 2001 dot-com bubble or the 2008 financial crisis. So whenever you see your account take a significant drop over a very short time frame, like we just did March of this year, it can be a real gut check. Now, this goes back to the first couple points that we talked about regarding time spent in the market and compound interest, especially for those of you who are just getting started with investing. Now, obviously, all of us would love to be able to time the market and know exactly when to sell at the highs so that we can then buy back in at the lows. But I'm sorry, guys, that's just unrealistic. I have no idea where the market's going to be tomorrow, just like I have no idea where it's going to be 10 years from now. But what I do know is that over time, the market always goes up. That's why I think that it's absolutely necessary that anybody who is considering investing money in the stock market know that it's inevitable that at some point in time, they're going to lose money and their account value is going to go down. That's why before you do any investing, you really need to take a look at what your true risk tolerance is. If you do that and know that it's inevitable that at some point in time you're going to lose money, then hopefully when a bear market presents itself, like it just recently did, you'll also be able to take advantage of wonderful buying opportunities. That way, whenever you see amazing companies being sold off, you'll be able to buy them so that you can also take advantage of the inevitable stock market recovery. That brings us to our 7th and final point. Don't get emotional. Emotions are going to play a huge part whenever it comes to investing. What I mean by that is it's so easy to log into your account and feel exuberant about yourself whenever all you see is green. You might find yourself thinking that you're the best investor in the world and that getting rich in the stock market is easy.
All I do is win, 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 no matter what.
But then we find ourselves with a global crisis like what we're currently going through. And you log into your stock market account and all of that green that you once saw is now replaced by red. And you might initially think to yourself, okay, I can get through this. But next you log into whatever website it is that you use to check your news and you see headline after headline talking about a global crisis, a stock market crash. And then fear starts to creep in. Look back in history during any stock market crash and you'll see headlines like this that drove people to do irrational things with their money. This is where money emotions comes into play. But emotions can come into play at other points in time too, not just during a crisis. Let's say, for example, that you decide to buy a stock worth $50.
And it's a really bad stock.
Things are going great for the first couple months, but then all of a sudden, that $50 stock that you bought just plummets. Its value gets cut in half. But you don't want to sell. You want to wait until its value at least goes back up to what you bought it at so that you can break even. You just can't stomach the idea of losing money, so you decide to hold it. But then next thing you know, its value continues to sink and your investment is worth next to nothing. Guys, this is emotions. Don't let emotions happen to you whenever you're investing. Don't get the fear of missing out and put your money into an investment that you don't truly understand. Don't put your money into something like cryptocurrency hoping that you can just get a quick buck. Please, guys, do your research. Start early, but also start small. That way you can get experience whenever it comes to investing. Know that inevitably at some point in time, you're probably going to see a short-term loss in your account. But if you did your research, you'll know whether or not the investment that you're holding is a sound one, or if the fundamentals of the company has changed and it's something that you should consider getting out of. Please, don't gamble whenever it comes to your money. As a reminder, I'm not a certified financial planner. I'm a resident physician who recognizes the importance of taking an active role whenever it comes to managing my finances and wanted to encourage others to do the same. With that being said, I encourage everybody to do their own research before making any financial decisions. That concludes another episode of Physician, Finances, and Investing. I hope that you guys found this video both fun and informative. If you have any questions or would like me to talk about a particular topic in a future video, please feel free to comment below and I'll be sure to get that information to you guys. And if you haven't already, please smash that like button and click on that subscribe button to let me know that you like what we're doing here at Physician, Finances, and Investing and to help support my channel. Thanks everyone, and have a great day.